We're going to do a brief video on Tesla stock, TSLA, Tesla stock analysis, and we're going to put some technical analysis in there as well. Let's take a look at this stock real quick. We've got a daily chart here. Tesla's down only about $1.40 right now, down a little more than 0.5%, trading at $223, but that's down significantly from yesterday's high. The range today is $223 to $233. We're going to take a look at this real quick, then I'll show you some algorithmically generated entry prices. As we can see, Tesla has been in a bear market, and it's first kind of really started this bear market seriously back in May, came back up, tested the 200-day moving average, which is in blue here, and bounced off of the bottom of the 200-day moving average, and then came down here and put in a fresh low just a few days ago right here at 198. So Tesla came off of 198. We can expand this a little bit, take a closer look at it. We can see it came off of 198 on October 24th, and it's rallied up the past 3 or 4 days here to where now we're above the 20-day moving average, which is a hugely positive thing for Tesla. There's several things going on. We're below the 200-day moving average, we're flirting with the 20-day moving average, and we're above the 5-day moving average. So what does that mean? The reality is we're still in a bear market in Tesla, and a pretty good one. We just put in a new bottom right here on the 24th. A lot of stocks put in a bottom on October 13th and have been rallying very nicely. The bottom line with Tesla is it's overbought already. So here's an overbought condition. What goes up must come down. This is a nice condition where we're not overbought. We go up, we come down a little bit, up some more, and you'll notice we hold higher bottoms the whole way, higher tops, and we make a rally, a decent rally from this particular, let's just call it 209, all the way up here to $304. So that's a sustainable rally. But this particular rally that we've got here very much mimics this rally back in June, the end of May. And I think the point is, I think we're going to come back down here to at least $214 and probably a little lower than that, and see if we can catch some support. I don't expect that to happen probably till the first or second week in November, which is not that far away. But I do expect this stock to sell off down into 210 range, and then we'll take a look and see if this bottom from October 24th holds. So we're looking at this from a variety of different ways, but mainly what we're talking about is what is the structure of the movement of this stock? And the structure is it's currently overbought, and that's why I believe we've sold down already from its highs of yesterday, and it's not holding its rally. But from a perspective of, does it look better than it's looked here? Yeah, it certainly does look a lot better. Let's take a look at the hourly chart and see what's going on. As you can see on here, it's been below the 200-hour moving average, is blue, since September 22nd. That's not a disaster. Some of them have been below it since the end of August, but it's not great. And as you can see, even with a fairly decent rally, it's still below the 200-hour moving average. So from the perspective of a strong stock, this one doesn't meet those definitions. It's still a weak stock in a bear market, even on an hourly chart going back more than a month. Again, not being negative, just trying to read the charts. This is a chart that's not real helpful, but it is a chart of the weekly price and 200-week moving average. It's below the 5-week moving average, below the 20-week moving average, above the 200-week moving average. But the price on the 200-week moving average is about $159 today, so that's not real hopeful. You'll notice that it has violated the same 206 point that I showed you earlier, and put in its new low here, this 198. So not a disaster situation with Tesla, but certainly a situation where if it doesn't catch support on that daily chart when it tests its October 24th low right here, if it doesn't catch support and hold above that, then Tesla's going to sell off again further worse. But right now, I'm going to say, for entertainment purposes only, I'm going to say this stock's probably going to sell off to about 210 in the next week or so, and then we'll see if it's a buying opportunity at that point. Let's take a look and see what RBM Research says about it. We cover 190 plus stocks every morning before 7 a.m. Monday through Friday. These are the ones out for today, the 27th of October. Tesla's showing zeros across the board, which basically means don't buy today, and that's a good thing because Tesla's down a buck. And let's take a look and see what the trend following says for it. We also have algorithmically generated trend following for Tesla. 30-day hold. This basically means get in today, assuming your own analysis says a good idea. Get out before the end of 30 days. We have a short on Tesla today, the 27th of October, at $230. Tesla's high today is $233. So this price is, for hypothetical purposes only, this stock is profitable by about $6 already. and you take your profits as soon as you get them. So the direction and the price is good today on our trend following, again, for entertainment purposes only. You can get access to all of this every morning before 7 a.m. at rbamresearch.com. Link in the description below. Just head over to RBAM Research and put in your email address. Get free access, no credit card required, to 190 plus stocks, the major forex pairs, BTC crypto, and the most liquid futures contracts. Again, all updated by 7 a.m. the morning before, the morning of. Keep in mind, everything you've seen and heard on here, including our entry prices and our analysis, is for entertainment purposes only. You should always do your own analysis. You definitely trade at your own risk. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a great comment for us, please leave it in the comment section below.